If you're thinking about buying a home in Florida in 2026, this video could literally save you tens of thousands of dollars. I'm going to show you 7 things that nobody explains until it's too late. And number 3 is the one that gets people in the most trouble. Now you got it. Let's go. All right, I'm in beautiful Gulf Place today. This is right next to the Edwalline Regional Beach Access. This place is absolutely gorgeous. And right now, our first thing you must know is, well, insurance here in Florida. The hidden payment nobody warns you about. Florida's insurance is not like other states. Wind coverage, hurricane deductible, roof age rules, carriers dropping policies, premiums doubling overnight. It happens. You can qualify for the house. You can qualify for the loan. You can love the home and still not afford it because of the insurance. In Florida, you're not just buying homeowners insurance, you're buying hurricane risk, wind risk, storm risk, roof risk, all bundled into one policy, and every carrier prices that differently. Most people don't realize this until closing. You have separate wind coverage and you have hurricane deductibles. That means if a storm hits, your deductible is not $500 like most other policies in other states. It might be 5% of the home value, or if you want to look at it this way, on a $400,000 house, that's roughly $20,000 out of pocket. That's real money. Now let's talk about roofs, because that is the major factor in determining your insurance price. In Florida, your roof age matters more than almost anything. Some carriers will not insure a roof over 10 years old, some over 15, some over 20. I've seen buyers love a home. They get denied on insurance because the roof was too old. No warning, no exceptions. Another thing nobody tells you about is carriers drop people all the time here. You can be insured here today and get a letter next year saying, we're no longer renewing your policy. Now you're shopping in a bad market. With higher rates, fewer options, that is stressful. And let's be real, premiums can jump fast here. I've seen people go from $2,000 a year to $4,000 to $6,000. No claims, no changes, just market shifts. That changes your entire budget. This is why I tell every buyer this. You might qualify for the house, but you might not qualify for the insurance. And if you can't get affordable insurance, you can't afford the home. This is why with my clients, we don't guess. Before we even write an offer, we run insurance rates, we check the roof age, we check location, we check carrier options. Because surprises in real estate can get very expensive. My job is not just to get you under contract, my job is to protect you 10 years from now. So you're not calling me saying, man, I wish I would have known this. Now you do. All right, now that you understand insurance, let's go ahead and talk about flood zones, because that's another thing that trips people up all the time.
Hundreds of flooded out homeowners in Zone X. They face denied insurance claim and financial ruin tonight.
This is Jeff Burnett's 1.5 acres of paradise. In the process of buying this home, Burnett made sure flood zones were a part of the conversation.
The conversation, it was actually, you're in flood zone X. And I remember the specific percentage. It was 0.2% of any kind of flooding.
Then came Hurricane Milton.
We lost all of our vehicles. Everything we had replaced in the remodel, we lost.
FEMA gave him a little more than $1,000 for miscellaneous things like his generator rental. But the rest, denied, 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 and earlier this month, denied again.
All right, let's talk about flood zones, because this is one of the most misunderstood things in Florida real estate. And it's also where people make assumptions that cost them later. Now, one thing I will say up front, here on the Emerald Coast, we are actually at a higher natural elevation than a lot of Central and South Florida. So we don't deal with a lot of the flooding the same way places like Miami, Fort Lauderdale, or parts of Tampa do. We don't see the constant street flooding, the canal overflow, the stuff you see on the news. That's not here. That's the real advantage of living here. We're naturally high up, not as much flooding. Gotta love it. But that doesn't mean flooding is impossible, and it doesn't mean that you can ignore flood zones, because water does not care which zip code you are in. A lot of buyers hear this and think, oh good, I'm in flood zone X, everything's safe, I'm great. Flood zone X just means that the lender does not require flood insurance. It does not mean zero risk, it means lower statistical risk. Those are two very different things, and let me tell you, everybody I talk to, anybody that I represent, I tell them, I don't care if you're in flood zone X, go ahead and get the flood insurance, because you're not going to want to deal with FEMA. Let's talk about AE zone. Now that's different. That means the lender will require flood insurance, no exception. It's part of your monthly payment. You have to factor it in. Now I did have a client here recently that closed on a property in Breakfast Point, and part of their backyard was in flood zone AE, so they did have to get the mandatory flood insurance. Well, FEMA came in and changed the map. So now they're completely in flood zone X. If FEMA will do that from time to time, just go in there and start changing things around. So always keep updated. More about that coming up soon. Now, if you're in AE zone, that is different. That means that the lender will require flood insurance, no exceptions. It is part of your monthly payment. You have to factor that in. And this is where people get surprised because it's not your choice. If the lender requires flood, you're getting flood, or you're not buying the house. It's that simple. A lot of people ask me, John, how much is flood insurance? Well, flood insurance for my house, which I live in a pretty modest house right now, about $350,000. Our flood insurance for the year is $500 a year. Not a bad price to pay for peace of mind. Another thing most people never hear about is elevation certificates. This shows how high up your home sits compared to flood level. In some cases, this can lower your premium a lot. In other cases, it can confirm you're at higher risk. It is a powerful tool if you know how to use it. I will say this, most of the new construction, and you'll see this is why I'm so high on new construction all the time, most of the new construction, they are actually pouring in dirt to these neighborhoods to make everything above 15 feet above sea level, so everything is flood zone X. So when you hear me talking about new construction all the time and you're going, John, why are you talking about new construction all the time? Well, you don't have any flood zone issues there most of the time, and also the insurance is cheaper because all the roofs in these new subdivisions are up to code. That means they have the hurricane ties in and everything is good for insurance. Let me give you a real example. I had a client who thought they didn't need flood insurance. The house looked great, the neighborhood looked fine, no water anywhere. Well, we get to closing and the lender says flood insurance is required. Surprise. That changed their payment, and that could be a problem. If we had not checked early, that deal could have died. This is the big takeaway. Location matters more than price. You can find a cheaper home in a risky zone or a slightly higher priced home in a safer area. One protects your future, one creates stress every time. This is why with my clients, we check flood zones, we check elevation, we check lender rules, so there are no surprises later. Because surprises in real estate usually can cost money. All right, you might be asking yourself, John, where do I find all this flood zone information if I just want to do it on my own? I'll tell you all my secrets right now, but only if you like and subscribe to this channel. And call me if you have any real estate needs, 850-943-7777, or reach me anytime at john@mrbeachteam.com. All right, real quick, I'm going to let you on a secret, and I'm going to tell you exactly where I get flood zone information, and it all starts with the Federal Emergency Management Agency, or FEMA. That is the official source. That is what lenders use. That is what insurance companies use. That is what underwriters look at. If FEMA says the flood insurance is required, that's it. There's no arguing it. You're paying it. So the first place I go to is FEMA Flood Map Service Center. I plug in the address and it tells me the flood zone, the risk level, and whether flood is lender required. That's step one. Now, sometimes I'll also check the county appraiser site just for context. It can show you maps and elevation info. If you're in Walton County, you want to go to waltoncountypa.com, or if you're in Bay County, baycountypa.com. But I want you to hear this clearly. It doesn't matter what the property appraiser site says. FEMA always wins. If there's a difference, we go with FEMA. Then here's where most people stop, and this is where I go further. Once we know this flood zone, we run real insurance quotes, because two homes in the same flood zone can have totally different premiums. Elevation, foundation, construction, past claims, all of that matters. The map tells you the risk, the quote tells you cost. You need both. And if a home is in AE zone or close to water, I'll also ask about an elevation certificate. That shows how high the house actually sits compared to flood level. Sometimes that can save you thousands over time. Most agents never check that. We do. This is why I don't guess with my clients. We check FEMA. We confirm with the lender. We run insurance. We review elevation if needed. So there are no surprises at closing, because the prices in real estate are expensive, as we said before. My job is not just to show you houses in this cool Mr. Beach mobile. No. My job is to help you understand what you're really buying. So 5 years from now, you're still happy you made the decision, and when you have friends that want to move here, you say, hey, I have a great realtor. His name's Mr. Beach. You should call him. All right, now that you know about how flood zones work, let's talk about the next thing that catches people off guard, and that is the HOA.
Imagine a monthly bill that once cost $300 a month, skyrocketing to more than $3,300.
For condo owner Lorraine Roy to keep living in her 3-bedroom of more than 3 decades, her monthly homeowners association fee is now
$3,371.79.
3 reasons for the HOA fee hike: Orange County code violations, insurance compliance, and Senate Bill 4D. The legislation passed in response to the Surfside condo collapse in June 2021.
All right, guys, this is it. Number 3, the most dangerous section, and that is the silent budget killer HOA fees. Master HOA plus sub HOA in some of these buildings can really get you. Condo assessments, reserves, special assessments, rules on rentals, pet limits, parking limits, it can all bite you. And if you're not careful, if you don't have an agent that can kind of put you down the right path and is worried about you as a buyer, not their pocketbook, this can really cost you. That $250 HOA can turn into $700 overnight. So listen, a couple years ago, we had that tragedy happen in South Florida where the building collapsed. They have decided that that is not going to happen again, and now these condos are under rigorous inspection. That, coupled with the increase in insurance, that's kind of the good part, your HOA covers the outside insurance for your dwelling, has caused the HOA numbers to skyrocket. And there's also another little hidden thing here that a lot of people don't expect or don't even know about, and that is it warrantable? Warrantable versus non-warrantable. And I'm going to explain it to you in plain English. Warrantable means the banks feel it's safe and they'll lend on it. If it's non-warrantable, banks see it as risky. And when banks get nervous, buyers pay more, or buyers can't buy at all. Let's get to it. What is a warrantable condo? A warrantable condo meets the rules set by lenders and groups like Fannie Mae, Freddie Mac, the FHA, the VA. If a condo is warrantable, it means you can use conventional loans. You could have FHA or VA if approved. Lower interest rates, lower down payment, more buyers qualify, and easier resale value. This is the easy button condo. Most warrantable condos have at least 50% owner occupied, no single owner controls too many units, strong HOA reserves, no structural issues, healthy finances, no deferred maintenance. Basically, the building is stable and well run, so lenders are comfortable. What is a non-warrantable condo? A non-warrantable condo fails one or more of these tests. It does not mean it's a bad building overall. It means lenders see it as a risk, and risk equals higher cost. Here's what I see most on the Emerald Coast. Too many short-term rentals. If most units are Airbnbs, lenders get nervous. Income is unstable, high turnover. It's very common near the beach. The next is weak HOA finances. This is a big one, guys. You really have to dig on the HOA. Make sure you're in a good HOA building. There is a huge difference between a good HOA and a bad HOA here. And if the HOA has low reserve, is behind on repairs, has unpaid dues, and has no budget plan, banks say nope. And I will tell you nope too. Run the other way. If there's lawsuits, if the condo is suing a builder or contractor, it's an instant red flag, and most lenders won't touch it. Special assessments. If there's a big special assessment coming, new roofs, new balconies, new concrete, new seawall, that signals financial stress, and sometimes the insurance companies shy away. Investor concentration. If one person owns too many units, risk goes up, lenders pull back. Now, why does this matter to you as a buyer? This is the part most agents never even explain. If a condo is non-warrantable, here's what happens. Fewer loan options, no FHA, no VA, often no conventional. Higher down payments. Instead of 5% down, you may need 20, 25, 30% cash heavy. Higher interest rates. Rates are usually 0.5 to 1.5% higher. That's thousands over time. It's harder to resell. Smaller buyer pool, more cash buyers, longer time on market. That affects your exit strategy. I've seen buyers fall in love with a condo, get under contract, and then find out it's non-warrantable. All of a sudden, their loan doesn't work. Now they either have to come up with more cash or walk away. That's exactly why we check this early. Before my clients even write an offer on a condo, we check warrantability. We review HOA docs, we talk to lenders, we verify loan options so nobody gets surprised. HOAs, bottom line, they're not all created the same. Some are better than others. If you need to know which ones are the good ones and which ones are the bad ones, I know a guy. Call me, 850-943-7777. You can reach out anytime at johnandmrbeachteam.com. All right, on to the next. All right, let's get to the next item, and that is new construction and warranties, what's covered and what's not. Right now, I'm standing out in front of Nature Walk. Coulter Builders, these guys are absolutely awesome. They do a great job after the sale and during the sale. But hey, listen, there's some things you need to know. If you are buying a new home and you think the builder warranty has you fully covered, you might be setting yourself up for a very expensive surprise, because there are things that they don't tell you about construction warranties, and most agents never explain this. I'm gonna walk you through exactly what's covered, what's not, and why I still tell my buyers to get inspections on new homes. Let's start with the first warranty most builders give you, and that's the 1-year builder warranty. Now, this covers workmanship and materials the first year after you close. Things like doors not closing right, cracks in drywall, flooring issues, cabinets coming loose, minor electrical and plumbing problems, basically anything that looks wrong or doesn't work right in that first year. Sounds great, right? But here's the catch. If you don't report it in time, that's on you. If you miss the window, they're not fixing it. This is why I tell my buyers to treat that first year like a checklist, not like a honeymoon. Next is the 10-year structural warranty that you'll see new home builders give. Now, this covers major structural components, foundation, load-bearing walls, roof framing, major structural failures. Notice what I said, major failures. This doesn't mean small cracks. This doesn't mean settling. This doesn't mean cosmetic issue. It means serious problems, the kind you hope you never have. Most people think this means they're protected for 10 years on everything. That's just not true. It's very limited and very specific. These guys behind me do a great job on their 1 year. They actually have a concierge that hangs out with you and checks in with you monthly. Coulter does an incredible job walking you through that first year process, and I can't recommend him enough. Now let's talk about what is usually not covered, and that's cosmetic issues. An example of this is hairline drywall cracks, minor tile issues, trim gaps, floor squeaks, cabinet alignment, caulking problems, grout issues, little things that add up. Most of these get labeled as normal wear and tear or settling, which means not covered. And I've seen buyers get shocked when they find this out. Here's something almost nobody talks about, and that's transferability. Some warranties transfer to the next owners, some don't. Some only partially transfer. That matters if you sell in 5 years. That matters for resale value. That matters for buyers looking at your home later. And most people never ask, but I do. Guys, this is very important. I want you to listen to me when I talk to you about this. I recommend third-party inspections on new construction every single time. Yes, even on brand new homes, even with good builders, it doesn't matter, even with warranty, because builders build fast, crews rotate, subcontractors change, mistakes happen, not because they're bad people, but because they're human. I've seen missing insulation, I've seen reverse wiring, I've seen plumbing leaks behind walls, I've seen roof issues on brand new homes all before closing. An inspector works for you, not the builder. And I have a good group of inspectors I work with that love doing new construction homes and catch the little bitty details that you would definitely miss. Now let's get to punch lists. A punch list is your final walkthrough, list of things that need to be fixed before closing. This is your best line of defense. And most buyers rush it. They're excited, they're emotional, so they miss stuff. We slow it down. We document everything, we take pictures, we submit it properly, we follow up, because once you close, your leverage drops. Here's why I always recommend inspections. Not because I'm paranoid, not because I don't trust the builders, because I trust data and trust experience. I've represented a ton of buyers. I've seen what happens when things get missed, all because nobody checked. My job is not to get you under contract. My job is to protect you after the closing. Hey, if you're thinking about new construction on the Emerald Coast, you need someone in your corner who understands these warranties, who knows loopholes, who knows the timelines, who knows how to protect you. That's what I do. If you have any questions, please reach out. My name is John. People call me Mr. Beach. You can reach me anytime at 850-943-7777. Oh, and as an added bonus, when you close on one of these new constructed properties, I hook you up with a $777 bonus because I love you. And you need a $777 gift card to Lowe's or Home Depot. Believe me, you're moving into a new house. You need it. All right, guys, on to the next one, and that is short-term rental rules. And I'm on a street right now that has caused me more drama in my life than I ever want to tell you. These short-term rental rules here are absolutely insane, especially in Panama City Beach, because they can change from street to street. Take this street, for example, for some unknown reason. I really don't know why. All the homes on this street are not allowed to be short-term rented. Now, oftentimes I'll get phone calls from buyers that will say, John, this is a great price on this home. And the fact of the matter is, well, if it's on Wells Street, it can't be rented out. That's why it's priced the way it is. We don't price just on the price of the home here. When you're looking at an investment property, it's priced on what it brings in, not just the price of the home. So people will see the prices on the homes over here in this area, and you can see they're beautiful little houses, little beach cottages. Some of them got pools in the back, and people are like, oh man, I think this one was actually for sale. I think I almost put an offer on that one, and I found out it was not short-term rentable and completely looked like an idiot in front of my client. But you know, I prefer to call those learning lessons, not me being an idiot, because you have to learn them here. And to make it even more frustrating, they don't even have on Zillow what the the HOAs, or if there's an HOA, or if it's short-term rentable or not. So the only way you can find out if any of these properties are available to be a short-term rental is to call an agent and ask. And I'll tell you this too, guys, there have been situations where people have bought property down here and the real estate agent either did not know or did not disclose that the property that they were buying was not short-term rentable. That happened to a client of mine that's actually listing her property now. She bought in Palmetto Trace, thought it was a great deal on a home. It was a great deal on a home if it was a short-term rental. Unfortunately, her realtor did not understand that that neighborhood did not allow short-term rentals. So there goes her whole strategy. And unfortunately, she bought at the height of the market in 2023. So now she's in a really tough position because obviously the price of homes have gone down in the last 2 years here. So guys, when you're researching these properties, it's so very important that you get a trusted agent that you can talk to that knows these areas and knows, hey, there's Wells Street. We can't short-term rent on this property, but on this street, right over to the right, we can. And I don't understand why the rules and the regulations are set up like it is, but that is absolutely the case. Another example of that is Bidawee Beach. Bidawee Beach is the only private beach in Panama City Beach. The first 3 streets are short-term rentable coming from the beach. So the first 3 blocks, they're short-term rentables. Everything behind that, absolutely not. You can't short-term rent there. So just keep that in mind when looking for a property. Is the area short-term rentable or not? What does the zoning say? What do the permits say? Also, another thing people get tripped out on. Hey, John, I found this 1,000 square foot house. They have bunk beds all throughout. It sleeps 16. Well, it might sleep 16, but you're not allowed to do that because the permitting rules here only allow 1 guest per 150 square feet of household. So even though it can sleep 20, doesn't mean you can rent it to 20. And the reason behind that is safety. You know, they don't want to make a fire hazard out of a short-term rental. So please keep that in mind, guys. If you're shopping for short-term rental property down here, be vigilant and hire an agent that knows the area like the back of their hand. Your cousin's uncle who just got his real estate license just isn't going to cut it, or he might be able to cut it, but you're going to have to take the lessons that he learns. To my clients that had to do that with me, the people that I put the offer in, I'm so sorry I put an offer. I admit it happened to me too, man. I mean, listen, we're all human, we make mistakes, but we did put an offer on a home that was zoned in a non-short-term rental place. We caught it before it went under contract, but you know, a little egg on my face. I felt a little embarrassed. I'm very sorry to my buyer that happened. Guess what? Never gonna happen again. On to the next. All right, we're here at Baytown Wharf, beautiful Sandestin, Florida, with my good buddy George from Setco, and talking about fraud. You guys get hit with a lot of stuff all the time. I trust Setco personally with all my clients. What's the latest thing that's going around?
Wire fraud's still extremely prevalent, John. Just this week we had an attempt, and it's where people get comfortable. It's all human error. We've got more security protocols than most, I would say, software, vetting bank accounts, et cetera, but still, people get comfortable, and all of a sudden you get an email that's one character off, and they try and get you to wire the money somewhere else. And it happens to us. They're trying to get to clients' money through us. It happens to real estate agents. It's tricky. These dudes are smart out there.
No.
And we have to be diligent, but it's a team effort. I need you to help me just as much as vice versa and protect you, because if they're looking at your email, not that they would look at your email, John, I know you're very secure.
Encrypted, sir.
Exactly.
My
I know you're
password is
secure.
not password 1234.
Scared the hell out of you about this. But yeah, it's still out there. Wire fraud, just stay diligent. You know, trust your gut. Make a phone call. That is the biggest part of the wire fraud. Make a phone call.
Yes.
Simple as that.
I tell all my clients that if you are in the middle of a transaction and if you feel anything fishy, if anything is off, you call me or you call George at Setco immediately. Wire fraud here in Florida is rampant, and we are here to help you stop it. All right, guys, we're up to number 7, and I'm here with my good friend Andy Cady. A loan officer is one of the most important parts of your transaction here when you're transacting in the state of Florida. This is a strategy that most buyers miss. Now, of course, you have the big 3 that you're probably aware of. You got the FHA, the VA, the conventional, but there are also other loans. Andy's here today. We do a lot of work with this guy. He's really great in the VA space. Andy, why don't you tell us about the loan options and why a loan officer that knows Florida is so important for the buyer?
Yeah, listen, it's super super important to understand Florida's little nuances, especially when it comes to homeowners insurance. Condos in the state of Florida operate different than any other state in the country. So there's a lot of nuances in Florida. That's why working with like a local loan officer is such a strong thing you're gonna need to do as you get into the market. You said VA. It's hands down the best loan program out there. There's nothing quite like the VA loan. You know, you get that optionality to come in with zero down payment, no monthly PMI, and the interest rates on a VA loan are typically a little bit better than a lot of other loan programs out there. So VA, hands down, the best loan product on the market.
And let me interject real quick. If you are a veteran, I've never seen anybody go to battle for my veterans like this guy. I've never in my life had a loan officer stick it on the line and tell the selling agent, you're gonna take care of my client because this guy has a Purple Heart. This guy will do that kind of stuff. So if you're looking for a great VA lender, even if you don't use me as your realtor, look this guy up, he's good.
Yeah, thank you. You know, jumping on to FHA, 3.5% down payment, great optionality. Again, interest rates are really good on the government-backed loans, so great optionality for first-time home buyers or someone that might be a little bit more credit challenged. You can go down to 500 credit score with a 10% down payment on FHA. 580 and above, you can get in with 3.5% down. When you talk about conventional loans, something a lot of people think about conventional loans is 20% down. You need 20%, and it's just not right. You can get into a conventional purchase with as little as 3% down as a first-time home buyer, or 5% down if you're not a first-time home buyer. And you say, well, I've got PMI at that. I don't want to pay $300 a month in PMI. Well, you'd be shocked at how cheap PMI can be, because PMI is actually calculated on two different things, calculated on your credit score and how much you're putting down. If you have an 800 credit score, I just did a transaction a couple days ago. The buyer was concerned his PMI was going to be $300-400 a month, $500,000 deal. He's got an over 800 credit score. His PMI is $92 a month. Woo. For him, saving an extra 15% on down payment to have extra money in the bank, for him, he kind of looked at PMI as, you know, a bad credit tax, or someone who doesn't have the money to put it down as kind of a tax on them. And I reframed it and said, no, I think it's a smart tax for investors. You can earn a lot more money with that 15% deployed than $92 a month. So, you know, going into other loan programs, we got so many different options when it comes to non-traditional lending, especially here where we have such a big market for Airbnbs. We have a product, it's a DSCR loan. Big word, you know, it stands for debt service coverage ratio. If I had to put that program into a nutshell, it really is the investor's dream product. You can go in on a rental property purchase and you can close that transaction with a credit report, a driver's license, and bank statements. The way that works is as long as the property cash flows. If your monthly payment on that rental property is $3,000 a month and the projected rents are $3,100 a month or $3,001, that property cash flows. We don't need any documentation from the buyer. We don't need tax returns and W-2s and pay stubs. And we do have lenders that will even go below 100% ratio on that. I've got a lender that'll do down to 0.8%. So if you've got, for easy math, a $10,000 payment, but rents are only $8,100, they'll still do that deal. So another great option when you're looking at rental properties in this area. And I could go on and on. There's asset depletion loans for people that are in retirement and they have a big 401k or an IRA, and they don't necessarily want to create a taxable event to distribute money from that. We can asset deplete really any liquid asset you have or illiquid asset you have and create income on paper to get you the house you're looking for.
That's so interesting, man. And this is why I say a loan officer that knows their business is so important in this industry, because where some people will tell you no and you think, that's the end. Believe me, you go to this guy's my killer. He's my ace in the hole. When there's a lender that says a deal's not gonna go through, I just call Andy up. 9 times out of 10, he can figure it out. A loan officer on your side is always a great thing to have, and Andy's one of the best. Thank you, brother.
Appreciate it.
Okay. Hold the brakes. You know, Andy just dropped a dime. I'm not ready to let him go. After he told me this, I gotta put you on camera. So tell me what you just told me about the DSCR loan.
Yeah, so I've got a transaction going right now where we were under contract. It was a standard rental property purchase, conventional loan. We were about a week into the transaction where the buyer lost his job. He's been furloughed from his company and is actively seeking new employment. In any other scenario, this deal is dead. The guy has no usable income right now. We were able to flip this to a DSCR loan, 20% down payment on it. So simple, easy setup. He was already putting 20% down. And when we got the appraisal report back, it didn't cash flow. His payment is about $5,200 a month, and the projected rents are about $4,575 a month. We were able to still do it DSCR because it's at least 8/10 of the way there. And we're gonna close this transaction with a bank statement, credit report, and driver's license. This is a 10-day clear to close type thing. Another transaction I did here locally, Inlet Beach, this was a $5 million purchase, an Airbnb that they were buying. We did a short-term rental projection on this to DSCR. This doesn't have to be a long-term rent. This is a $5 million purchase, $3 million loan amount. The projected rents on AirDNA were $43,000 a month for this property. The projected, or the payment for the client was $27,000 a month. Again, 10 days, we had that one clear to close with driver's license, bank statement, credit report, and LLC docs because they closed it in an LLC. That's another great thing about DSCR loans. You can close them in a business. You can get them, most like conventional loans, you can move it to a business afterwards. This, you can close right in the LLC.
Woo-wee, boy, I'm telling you, this boy knows his stuff, and this is the time to invest. Right now, guys, I mean, I'm telling you right now, we have a buyer's market still. We are seeing things change quickly here. I mean, it's quickly turning over. We have, how many do you have under contract right now?
I'll give you this number. This should really kind of spell out how busy the market's getting, and we could see this shift back to a seller, or we could shift very quickly in the market. In the third quarter of last year, I sent out 31 pre-approvals. In January, I sent out 23. The market has picked up, buyers are coming out of the woodwork, and we're seeing a lot of investors looking at condos, condotels, all sorts of properties around here. That's what I specialize in.
Yeah, we've been talking about the end, where's the bottom in the condo market, guys. I've been out there actually looking at condos with the buyer here just last week, and the fact of the matter is these are starting to get picked off now. So we have seen the bottom. We've got no place to go but up, but as we go back up, those prices will stabilize and they'll start to tick back up again. So if you're in the market, holla at your boy. All right, guys, that does it for today. If you like what you're seeing on this channel and maybe you're not buying, maybe you just enjoy watching the videos, do me a favor, hit that like and subscribe button. Got a lot of folks that are watching that watch a lot but don't subscribe. It helps me and my family when you do that. And hey, if you'd like more information on moving to the Emerald Coast, you definitely want to check out this video right here. It's a really good one we did. Until next time, guys, God bless you and your family. We'll see you next time.